Well, we've got breaking news on Canada's economy, and Canada lost more than 40,000 jobs in the month of July. This is conservatively a big disappointment, to say the least. This is the July jobs data that comes after a huge June for the Canadian economy. Remember, in last month's data, we saw a more than 80,000 job creation story for the Canadian economy. Already, economists on Bay Street were expecting that we wouldn't see that in the July numbers, but still, Bay Street was expecting that we would see 10,000 jobs created. Now we're reporting a decline of 40.8 thousand jobs in July, according to Stats Canada. Job losses were led by the recreation sector, more than 29,000 there. Full-time employment was down 51,000 positions, driving the monthly job losses. We did see some part-time employment creation, about 10,000 jobs. As for the unemployment rate, that held steady at 6.9%. There was an estimate it might tick up to 7%, so I guess you can take that with a grain of salt. But overall, we are seeing the jobs story get reaction in the currency market, where right now we're looking at the Canadian dollar lose some momentum this morning. And just a reminder for that overall jobs report number, loss of more than 40,000 positions for Canada's economy this morning. And I just want to get some instant reaction on this as we continue to go through the data. Brendon Bernard is joining us here in studio. He's a senior economist at Indeed. Ryan Loenza is still alongside us as well. We're going to keep going through the data, but I just wanted to give you a quick opportunity, Brendon, to weigh in here. The caveat being, like, Stats Can always sort of sets us up for a possible roller coaster ride month to month. But what do you make of this?
The roller coaster continues. We had a real surprising beat last month. This time around, much weaker. I think the first thing that I'm looking at with these numbers is I'm not seeing this as a trade war report. You mentioned the industries that led the decline. Information and culture and construction, job losses in Alberta and British Columbia. If I'm thinking trade war is the cause of the weakness, it's Ontario, it's manufacturing leading the declines. And so this then puts us in the world of kind of just the general malaise that the Canadian job market has been in over the past few years. It hasn't been a straight ride down. And even today we saw the unemployment rate hold steady at 6.9%. But when the trend is underwhelming, you're going to get weak numbers like this.
What about look, a lot is going to be a lot of stories are going to be written about this headline number. Yeah. So a lot of conclusions are going to be made about that headline number. That's just the reality of big numbers. And whether we need to take it with a grain of salt is another story. But one of the things that's interesting is that compared with a year earlier, unemployed job searchers were more likely to remain jobless from 1 month to the next. Nearly 65% of those who were unemployed in June remained so in July. That was up from less than 57% a year ago. So the layoff rate is unchanged. But getting into the labor force is challenging right now. And Ryan, we were talking earlier about how just sector by sector, things kind of feel like they're in a standstill right now.
Yeah, on my end, real quickly, I was back home in Windsor. That's where I'm born and raised, automotive capital of Canada. And I was actually talking to my uncle, Ken Loenza, used to be the head of the CAW, big union leader, and said, Ken, what's going on in the auto business in Windsor? It's terrible. They're down a full line. They were expecting to go to three shifts. And so what are you seeing in the auto sector broadly, not just in this report, but like on a trend basis? Are we actually seeing job losses there?
Yeah. In the most trade-exposed areas of the economy, autos, steel and aluminum, a few areas of like wholesale trade and transportation involved in those sectors, we have seen job losses over the past few months. Can't speak to today's report, but this is the trend that's in the data. And so far this year, gains elsewhere have been able to offset those declines. And so on net, the job market has treaded water because we've got hits to U.S. exposed sectors, not overwhelming, but still hits, especially where things are really concentrated like autos. But enough gains elsewhere to push the ball forward. And today, the rest of the economy was faring weaker. Just going back on what you were saying about getting in versus layoffs, this is the story of the past 2 or 3 years. There's a dual track labor market. Those comfortably employed, their job security has remained pretty solid. That's not the reason the unemployment rate is up. It's gotten tougher to get a job, and we see that in a range of stats.
Well, as we watch the market reaction to this jobs data, we'll remind you that the Canadian dollar immediately lost ground against the greenback. It's recovering slightly, but the way that works is obviously if there's a belief in the market that interest rates are going up, that might make the loonie stronger against the U.S. currency. All of a sudden, this opened the door to what the Bank of Canada will do with interest rates. And just to recap, folks, we saw Canada unexpectedly shed 40,800 jobs in July, and that was the most we'd seen since the pandemic, the largest drop in 7 years. Now, going back to something we've already highlighted, the monthly decline was concentrated with youth. So between 15 and 24 is the characterization from Stats Canada. Oftentimes, they are the first to experience a labor market downturn, and anybody who's got kids or relatives that have been trying to get into the job market this summer, it's been a bit dicey for them. But I guess I do wonder whether or not, and Brendon, I'll sort of bring it back to you as well, whether we should look at that youth story as sort of the first leg of uncertainty, or if we just have to sort of continue to watch how things play out. Like Ryan was saying earlier to us, we still don't know what the trade story is going to look like in 3, 4, 5 months, and maybe this is just a byproduct of that.
Yeah, this youth story is not new either. The Canadian youth employment situation, especially the younger the age group you get, like into the teenage age group, has just been really weak over the past 2 years. And it's disappointing to see another weak number in today's data. It was already a tough summer job market. Share of youth working was well down from the prior 2 years. And rather than get any relief, July is always the peak of the summer job market. Today, we got an even further deterioration.
A quick question here on the federal government and the government side. When our unemployment rate got down into the 5s, I was reading that really the main contributor of our large job growth was coming from the federal government, as our previous prime minister brought out a lot of new services and added to the civil force. So what are you seeing there?
So right now today, just looking at the breakdown across different sectors, we had public sector employees up 4,000, so pretty flat, but like the declines were driven in the private sector. And definitely on net, compared to like 2020, the pandemic, public sector has grown faster than the rest of the economy, especially public sector growth, self-employment weakness. Private sector employees kind of like fitting along in the middle there. I'm expecting that surge in public sector employment is going to start to plateau pretty soon. We've seen actually in the job vacancy data, not just in government, but also healthcare and education, job vacancies come down. So there's this strong hiring boom that is now on the wane. We had flat numbers in today's job report, but I think with the size of the sector elevated today, now going forward, there's probably less prospect for growth.
Brendon, just to sort of tie this back to where the economy goes and what the Bank of Canada does, just trying to get a sense. I mean, the market was still a bit fancy about whether the BOC would want to cut interest rates in September, and obviously they've sort of been in pause mode here after some pretty aggressive cuts, which made us a little bit different than the U.S., where after a lousy jobs report a week ago, people said, oh, okay, pretty much looks like the Fed might now consider cutting rates. What do you think the Bank of Canada does in September?
Yeah, well, after several months of cuts, we're kind of like, we've got now a negative data point to add to the list. And I think there'll be a few more data points to come out between now and then. And of course, what happens on the inflation front is going to matter most. But when it comes to seeing the job market on a bit shakier ground, that definitely opens the door, particularly if inflation comes a little on the softer side, which it hasn't been recently. And so that's one reason I wouldn't necessarily totally change the call. But but the market reaction speaks for itself. Weak signal in today's numbers, if followed up by more data, definitely is going to put a cut on the table.
Okay, Brendon, it was really good to get your perspective on this. Obviously, you never know what you're going to get with these monthly figures when we go from a big June to a very challenging July for Canada's jobs market. Brendon Bernard, senior economist at Indeed.